The fourth quarter net profit figure came in at 465 million euros. That was below analyst estimates. Where were the weak spots? How come you missed estimates here?
Yeah, actually, if you look at let's look at the year to start with. We complete a year with about 4.5% growth for the year, which for us is a very good year, and record profitability, 10.5% adjusted and 10% reported profitability. That's actually the best profitability we've had in the last 10 years. Now, to your question on the fourth quarter, we finished the year on a stable note, and what was missing was, I think, a little bit of extra revenue, in particular in the domain of lifestyle, in our consumer business. And there are two reasons. One was a bit of a subdued consumer sentiment in the Western world, combined with the fact that in the Philips calendar, we had 3 working days less compared to last year, because we had just those 3 extra days in the first quarter, and we were missing them in our Philips calendar in the last quarter. And that ended up costing us probably 3 to 4 points of growth in that fourth quarter.
Now, you did warn investors that there may be patchy consumer sentiment during the fourth quarter. What's your outlook for 2011, though?
Well, we think that looking in, basically, the consumer sentiment in the Western world might remain subdued. At least that's the way we see it. But we think that as far as consumer sentiment for the rest of the world, we think that it will continue to remain actually positive, if not solid, in particular in emerging markets. But that's only a part of Philips. The rest of the professional portfolio of Philips, whether it's in healthcare, there we finished the year with a very strong backlog. We had actually 9% incoming orders for the year in our equipment business for healthcare. So we finished with a very strong backlog that gives us positive feeling for next year. And in the domain of lighting, we grew 9% for the whole of 2010, and we believe that next year there will be obviously continued need for LED, which is a new technology there. And we expect in the second part of next year a rebound of the commercial constructions market, which has been actually dull for the last almost 2 years now.
Interesting to hear you say that healthcare is looking good going forward, especially when you have austerity measures being implemented across Europe and the U.S. Presumably there are significant headwinds in that business.
Well, our healthcare business, some of it is a business which works with backlog, which is all what we call our equipment business. And as I said, we had strong incoming orders actually in the whole of 2010. We finished the year with a backlog which is the highest we've ever had. It's about 10% in absolute euros versus what it was a year ago at the same period of time. So that's one thing. The second thing is that we have created a few years back a home healthcare business, which is a business which takes care of people that are suffering from chronic diseases at home, and that business continues to grow nicely. Finally, I will add that emerging markets, where healthcare spending is still a modest percentage versus the GDP of those particular countries, in those countries, definitely healthcare spending will continue to grow.
What can you tell us about the loss-making TV division? A lot of investors calling for you to get out of that business altogether.
Well, we basically have taken a lot of actions. We basically as well delivered in this quarter at the low end of the guidance we had given for that business early December. You will have seen in our press release that we have now signed in the very last days of December a deal for China with a company called TPV, and you've seen in the release that we're not satisfied with the results for the year, and we will continue to take some measures there to basically continue to update the business models we're using into that particular activity.
Now, you've raised your dividend slightly more than analysts had expected, but what are you going to do with your cash pile? Are you comfortable enough to restart your share buyback program, for example, that was halted before the economic crisis?
Well, if you look, yes, thank you for spotting the dividend. We are recommending yet another increase of the dividend. We will be recommending to our shareholders 75 cents, which actually puts it slightly north of our payout policy, which is the most generous payout policy among our peers. We will have to pay in the first half of 2011 a 1 billion installment on our long-term debt. And basically, we are as well looking at a portfolio of potential acquisition. Doesn't mean that we will make them, but we have a few things there we are currently looking at. And if there were to be some money left after this, we might consider some buyback. But in that particular order, which is A, protect the rating, B, increase the dividend, C, look at potential acquisition, and D, buyback, which is a way we've actually prioritized our capital reallocation policy for the years to come.
Okay, Pierre-Jean Sivignon, thank you very much for joining us.